And welcome to another edition of Roadhouse Last Call. I am the Hells Bells. We have the Binda, and we may or may not have Bubble Boy. This is Talkington. Binda.
Bubble boy.
I
I like that. I mean, that's what happens when you have no life experiences.
I was
become
sitting
the
there
Bubble Boy.
pondering Bubble Boy yesterday, and just sitting here going, you know, it's good in some ways. He probably has more like cash than I did at his age, because he's not running around spending dopey money.
I was gonna say, I can almost guarantee he's got more than I did.
Because it's like the spending of the dopey money. That was insane. It was just like, yeah, no, just yeah, no.
But we don't even know how old he is.
We don't. But what? Let's put it like this.
You're making assumptions. You're profiling.
I think it's safer for him that we do. I think because
Probably.
the older he is without these experiences, the more difficult it is to really, really trust what he has to say, in my opinion.
Fair enough.
Yeah. Yeah, buddy. Anything new in your world?
I'm sitting here waiting for you to tell me about the who they are and what this price is they're willing to pay.
Joker and the Thief?
Yeah.
Well, we can get in that a little bit. Joker and the Thief are still very, very relevant. Before we do that, let's get into a couple of little things. Unfortunately, Prime Minister Abe was killed yesterday at a campaign rally. Obviously, it's a sad state of affairs when you see world leaders, former world leaders, being cut down. Nobody likes to see it. It's just, I hate even talking about it, but it's in the news, and it's one of those things. I don't know that it has market implications necessarily. There's some conversation that he was still in the background, trying to play with monetary policy, and Japan being really the only country that has not, other than China, taking a very, very hawkish stance on rates. Very, very interesting dynamic there. So we'll see how that plays out. From a headline standpoint, it's fairly muted today. There's not a whole hell of a lot coming into this job sprint. We did have the job sprint. The immediate market reaction is fairly obvious. The labor market is still strong, or as the Fed would say, tight to too tight. That just gives them more ability and more room to raise rates. So we'll see how that plays out. We do have a Fed speaker today. The other piece of data coming out today that is, I think, fairly important, that is kind of under the radar, is consumer credit. Really curious to see how that number comes out. We'll be watching MasterCard and Visa flow to see whether or not there's any positioning coming into that number. It becomes very interesting because a lot of these articles and conversations are centering around the fact that while the consumer is still spending, while the consumer is still employed, they are tapping into their savings in order to make up the deficit via inflation. So that consumer credit number is going to be very interesting, in my opinion. So I'm going to be keeping an eye on that. And then we have Fed Williams speaking at 11 a.m. Eastern. That's really all I have, Bender. Flow-wise yesterday, there were some nice shots being taken to the upside and not a lot of put flow. But we get this little reaction today that the market is going to absolutely want to digest what this means. How much more upside do we get as far as interest rates before the Fed realizes that we may want to pull back? But if I'm being fair, Bender, when I talk about if the data continues to hold, they have the room to do what they need to do. And even if we can make arguments that we're dealing with lagging data, we can make arguments that, it's like, just because that Hilton can't hire enough maids doesn't mean that the labor market is too tight. And that's really what the conversation is we don't have enough cooks, we don't have enough maids, we don't have enough this, we don't have enough that. When we're seeing some of these white collar jobs getting peeled back, both in finance, real estate, entertainment, also retail to an extent, some manufacturing. It's like we're seeing this peel back in some sectors, but the only thing that we want to hear about when they talk about the job market being too tight is there's not enough maids. I don't know how to digest that, but I guess we'll figure out how to deal with that as we go on. So with this being said, that I don't have really a whole hell of a lot, Bender, your lines become very important when we get these big old drops like this. So help the peoples.
All right. Well, we did not convincingly reclaim that trendline support for that longer term channel. We talked about that yesterday. We needed to really take 39.10 and then hold it. We have not done that yet. And last night, I took an entry long with a pretty tight stop. And I was trying to play off of the 20 MA on the 60-minute. And I got stopped out. But I had posted that here's where I'll stop out, and then the next opportunity comes in at the 50 MA on the 60-minute, which we just tapped it on this pullback. So that's 38.68, and I think we nailed it to the penny. So I would continue to look at that 38.68. Again, that's the 50 MA on the 60-minute. So we're currently sitting 38.77 above. We have 38.91. There's a fib there. It's also the 10 MA on the 60-minute, 38.91. Then you got 3900 hold number, 39.10 to get above that trend line, and 39.50, which was previous resistance. I think above that is where, at least in the short term, bears kind of run for the hills, and if had enough pain, at least up to 39.77, which opens the door to 4,000. Support below, potential support. Again, 38.68 being the 50 MA on the 60-minute. And then you got 38.50, which, was definitely an area of contention, previous resistance. Hopefully that acts as support. Below that, you got 38.31. There's a fib at 38.31, and we talked about that level yesterday being very important, the 38.30s. You got 38.31, there's a fib, 38.33 is the 20 MA on the daily, and 38.34 is the 200 on the 60-minute. So if we give up that 38.50, again, same as yesterday, 38.30s, I would say are pretty damn important that we hold as support, or we're not gonna go make 4,000 before we test the lows again. So that's kind of what I'm looking at. Any questions about that?
No, man, I don't, because it's like we can easily just play, rinse and repeat off of these lines over and over and over again.
And we tend to, right? Like we tend to until we leave them behind, one direction or another. We tend to talk about the same levels for, a few days. And especially the way that things have been moving, just like you said, rinse and repeat, like kind of the range that we've been in.
It's a real lack of continuation, and it's like, it's funny. So I've transposed a lot of your lines in some capacity to SPY and looking at them. And so when you talk about certain things, compared to the ES, I can see it fairly easily. But it's like that 50, at least on SPY, that basically takes us to the neckline of that little inverse head and shoulders that you were talking about that ultimately played out to the upside. Mm-hmm. So 383.50, that would be right where the 50 is sitting. And that is the upper neckline of that little inverse head and shoulders, double bottom-ish, whatever we want to call that in through there. So that makes sense. And then we came up on a broader standpoint, looking at it all the way up into effectively 390, which was, where we failed about, 8 days ago. We failed up in there. And so I'll just kind of post this to follow up with what Bender is saying. It's like his line's obviously better. His everything is with charting is better, but just from a visual standpoint, this is the last 10 days on the machine. So we came up, we hit that 390. I don't want to say rejected it. We just, maybe this is a consolidation above the 50, but that still offers some pretty substantial range in there, even if we consolidate above the 50. There's still hellified range. So I don't know, man. It's great having you back. I love the lines. I love what you're putting out there. It's really, really helpful. I can see within there's a lot of bull scenario in through here. That whole thing with the Fed, though, is, again, the rule is don't fight the Fed. And they're looking like they can be like, hey, we have plenty of room to continue to raise rates. Anyways, you got anything on that?
No.
Brendan says no. All right.
No. Don't.
So what do we got there, Stockington? What do you have for us other than an $11.5 billion dark pool?
Man, that's not enough. You want more than 11.5 billion?
Did you hear us making fun of you earlier? Or
Oh,
celebrating you?
no.
Just depending? Oh, okay, good. Good.
Oh, good. Thankfully, I must have still been asleep. So, that sounds fun, though. All right. So yeah, again, I'm liking this. Just stick with 3 on the list. So I posted Microsoft in there because we did drift out of the original levels I had. So Microsoft now stuck between to the upside. Earlier this week, they hit a dark pool. 266.22 was 458 million from a couple days ago. I also have a fib on Microsoft at 266.10. So I'd be looking to see if it could break those two to the upside to go long. And then below, it's got that dark pool 264.79, which if it breaks that to the downside, I keep putting Microsoft on the list all week this week just because I feel like it's been relatively flat. So still waiting for like a bigger move in either direction on Microsoft. Roblox is within my triggers at this point. I'd be looking for a break of 39.8 to take it long. Basically, pre-market resistance where it rejected yesterday as well. And then a break of 38.75 to the downside. Roblox on the daily popped on the inside bar scan twice in a row, just meaning that that's 2 days of like a pretty good buyer seller battle. So a break either way could see some nice momentum there on Roblox. And then PayPal, it did drift slightly out of the triggers on the 1 hour chart. To me, PayPal is looking like it just fell out of like a bearish upwards channel. So to the upside, it's got a dark pool above 74.29, and then I've got a line down below at 73.2. So PayPal could end up being a nice play to the downside there. SPY, already gave you the 11 billion, and then UVXY is kind of stuck between a couple levels that I'm just taking from you that you've been telling us about. We got 1380 above and 1330 below, so that'll be kind of what I'm watching there. All I got.
That's all we got. This little thing that you posted here, can you go through this one more time to make sure it's reiterated and beat into our heads? This little, your notes here.
I mean, obviously,
I just
Okay,
want it,
so-
I just want it sculled into our brain. More so is, repetition is like really like beat in here, like as far as understanding.
We'll focus on the important ones, which is 39.10 to get above that trend line. The trend line, what was trend line support, longer term parallel channel, 39.10. And 38.68 being the 50 MA on the 60 minute. We break below that, and obviously you can see all the levels that I put in there if we give up that 38.68. So I don't know, outside of that, how to give the shorter version at the end of the show here.
Okay.
You got 39.10 that trend line, 38.68 the 50 MA on the 60 minutes.
Okay. And that 38.68, if you're watching SPY, that effectively is where we bounce pre-market on SPY, right?
That would be, yeah. I mean, we
Create,
ES bounced right at 38.68.
so that's 385.50. That area down and through there. Just if you're wondering how to kind of look and see what it is, that's what he's talking about on the other side. All right, look, it's like I think flow is going to be fairly important. The data is fairly weak next week as far as what's coming out. Again, we have consumer credit coming out today, so I'm going to be watching Visa, MasterCard flow. Be watching bank flow also. We did get some bullish lines coming into banks yesterday. Want to see how they digest those lines based on the Fed being able to raise more, because that's what the data says. The Fed can raise more and has the data to back them to do it. So we're going to be watching that. Flow is going to be very, very important. I'll also say, and leave you on this, flow's also been very, very difficult to read this week. It's been very, very challenging because you're getting mixtures of a lot of biddish action, both with calls and puts, and filtered into some fairly actionable lines to the upside. We've had a great 4-day run to the upside. So in keeping all that in mind, keeping Bender's charts in mind, really have to be diligent in understanding where the money's moving and why they're moving. And so trying to figure out what sectors are getting action could tell us what's next. I want to try to stay focused on that. Today is a work day, probably a pretty important work day as far as flow is concerned going into next week with limited data. We really, really need to be sharp. We need to be wise. Last thing I'll say is this: if you've had a good week, if you're coming in today feeling like you're a baller, it's okay to be cool. It's okay to be chill. You don't have to take every trade. I didn't take any trades yesterday at all. Now, granted, I sat there and watched the market go buck wild to the upside and kind of had some regrets about it, but I didn't take a trade yesterday. Today, I'm going to be very, very diligent in making sure that setup is there. And really, these lines, it's like I will look to buy or go short based on the lines that vendors put out there in the range that's kind of been created for the day, which we can see at pre-market. There's our range right there from peak to trough. How to play within that is going to be the ultimate question. So, Bender, thank you again. Stockington, thank you again. You got anything else, buddy?
That's it for me.
That's it for the Bender. All right.
Yeah.
What do we got? We got 22 minutes. 22, you see, until the market opens. A lot can happen between now and then. We'll see you then. Thanks, Bender.